As of July 2018, according to last figures published by the National Treasury, of the 2.5 trillion total external debt, 71.7 was in US dollars, euro at 14.9%, Chinese yuan at 6.17%, Japanese yen at 4.3%, and the sterling pounds at 2.6%. Other currencies accounted for 0.3% of the portfolio. Total public debt as at September last year stood at 5.15 trillion. With planned move to go for international bond markets, Capital Markets Authority is calling for safeguards against forex exposure.
Although there is undoubted appetite for Kenya issuances in hard currency, we think it's time for the market to start testing the appetite for Kenya shilling issuances, which can also allow for a bit more, allow us to manage the volatility risk a bit better.
Muthaura says development of local currency through offshore debt financing could be one of the remedies to quell the crashing debt.
The perception of the stability of the currency will have an effect on uptake. But from our perspective, especially where you're having substantial issuances of local currency offshore, that then creates an alternative environment in which you could find that pricing around Kenyan shilling-denominated debt offshore might start reflecting.
Muthaura urged Treasury to deploy measures which CMA says would also address the issues of insolvency, especially for bonds that have not been listed, to spur confidence.
As long as there's going to be global, as long as our market will continue to rely too heavily on the participation of global investors, our market will see maybe outsized shocks from international markets on our own local environment. And that's why we continue to advocate much more aggressively around how do we empower and support our local institutional investors.
At the same time, CMA says the corporate bond market has been relatively dry, but that it will partner with the government in achieving the needed goals by adopting global financial innovation frameworks in order to streamline the capital market sector. Alan Aoko for Channel One Business.